Hello, everyone. And first and foremost, thank you for giving me the opportunity to invest your money and help you with your life savings. So the past few weeks has been crazy for the stock market. It continues to go down. And so I want to make this quick video to kind of show you an illustration of why holding our investments, not selling low, is the right way to go. Now, of course, nobody knows the future but God, and we don't know how many more days or weeks the market will continue to go down. But want to kind of give some illustrations on why holding the investments and staying where we are compared to selling something today and buying it at a higher price down the road is not the best financial advice that I could give. So let me show you my screen. Well, first, as I show my screen, we can see here the stock market, right? And the stock market was doing good. It was up. And then, of course, it has went down. And to take it back, so it's down by basically 3%. So $100,000, a person lost $3,000. We take it back a year. This happens. Over the past year, it's still up by 15%. So if a person had 100,000, they made 15,000. But I'd like to show you a couple things. Number one, it happens. And as it goes down, we can see historically it goes back up. Number two, when it went down this time last year, from February to April, it went down by about 20%. So I had $100,000, I lost $20,000. But if I just held tight, then what happened after that? Not only did we recover, but 6 months after that, we went from 100,000 down to 80,000 and 80,000 up to over 120,000. Now, again, past performance does not guarantee future results, but this is what the market does. And once every 15 months, the market has a bear market where it goes down by 20%. So this is normal. When we're in the storm, it does not feel normal because we're in the storm, but when the storm is ahead of us or behind us, it's just a normal storm. And right now, this is a normal storm. Also, out of 12 months, 4 months out the year, the market goes down, and 8 months out the year, the market goes up. So this is normal. Two more things to look at. Number one, the fear and greed index. This is an index made, and not being political, but CNN makes this, right? When people are fearful or when the market's going down, people become fearful. And the fear and greed index right now is at 35%. So out of 100 people, 35, out of 100 people, 65% of people are fearful of the market, right? That's why it's at 35%. So for 100 people right now, only 35 people want to invest and everybody else wants to get in cash. But historically speaking, when their index is either fear or extreme fear, over the following 12 months, the market has done better than its average. The market makes about 9% a year. So on $100,000, I should average $9,000 a year. You guys made way more than 9% last year, but still, that's the average. And past performance does not guarantee future results. But if history repeats itself, then as I close this ad, somebody's trying to sell me clothes. If history repeats itself, then over the next 12 months, it's a possibility that the market will do more than its average. And last time we was in extreme fear like this, look at that, right? The market went down, extreme fear like we are today, but it is up more than average over the past 12 months because, of course, even with the drops that's happening right now, the market's still up over 15% over the past 12 months. And the last thing to think about as well is that CNBC did this when the market kind of hit its bottom last year. Why dead investors outperform the living. See, individuals who are passed away but still have an account open, like with the trust, historically, their accounts do better than people like us who are living that can make changes. The reason why is because as investors, sometimes we do the wrong thing. We sell low and buy high. So as we can see, the average stock investor's return, right, from 2014 to 2023 was 5.5%. So how is it that the stock market averages 9%, but an average investor makes 5.5% who invests in the stock market? Because they do things that are quote unquote wrong. They buy high and they sell low. Compared to a person who quote unquote passed away, right? They earned 7.3%. So again, a person that's quote unquote not living has made more than the market over the same time. So we can see the average investor earned 21%, while the S&P returned 26%, and the average investor who was passed away earned more, right? So great article in CNBC. Not recommending CNBC. You can do, Fox Business News or wherever you want to choose to watch, but just a great article. But why dead investors always outperform the living, because times like this, when our account looked great 2 months ago and now was down by 10, 15, maybe 20%, this happens. But last year, performance wise, if I'm blessed to help you guys with your investments, you outperformed the market. You did better than the market. Last thing for us, we did buy Microsoft. Microsoft is down dramatically. Now, the average person uses Microsoft 18 times a day. 18 times. Microsoft Office, Word. We're using Microsoft products, right? In my opinion, Microsoft's not going anywhere. Not a recommendation, just information. But Microsoft, they had their once every 15-month downturn, and they're down by almost 20%. Do you believe that Microsoft is going to go out of business? I don't. Do you believe that Microsoft is a bad investment? I don't. So these are investments that we are looking into to purchase because at a low price. Facebook. Facebook hit an all-time high. Facebook hit an all-time high back last week on my wife's birthday, the 29th. We purposely sold some of your Facebook stock and bought Microsoft because we wanted to sell high Facebook and buy low. And the same thing with Google. Google hit an all-time high yesterday. Now, of course, Google went down, but Google hit an all-time high. So this is something else that might be sold to buy Microsoft. And one more company that might be something we might look into, not a guarantee, but AMD. AMD is the largest chip maker besides NVIDIA. We all need chips to power our cell phones, to power our computers, to power everything that we do. And they are the second largest chip maker, right? Since AMD made so much last year, right? They're on the downturn. Look at that. They made 70% last year. We all wish we had AMD to make 70%, right? But since they made so much, the companies that did way better than the market, of course, their stock goes down more. So not a recommendation, but this is something else that we'll look into because we want to take advantage of it because we're able to buy something literally at a, right now, 19% discount. If it gets back to where it was, that's a 25% gain, which is 4 times better than the stock market, or 3 times better. Well, that's that. Thank you guys so much for allowing me again to invest your money, help from a tax strategy standpoint. It's tax season. If you guys want us to help file your taxes, please give us a call. We'd love to help. We'd love to decrease your taxes this year. And as always, thank you for your support. You guys be blessed. Peace.